What's up, traders? Today we're diving deep into quantum flow, and I'm going to show you exactly how to spot the institutional money moves that most traders completely miss. I'll walk you through order blocks, fair value gaps, and how to read the actual footprints that smart money leaves on your charts. All right, I've got quantum flow loaded up here on TradingView. For those just joining us who don't have access yet, links in the description. But if you're already using quantum flow, this is about to change your entire analysis game. So most traders executing ICT and SMC concepts are doing it manually. They're eyeballing order blocks and guessing at fair value gaps based on candle patterns. Quantum flow takes those same ICT concepts, but backs them up with calculations that factor in volume, order flow, volatility, and institutional movement. No more second guessing whether that order block is actually valid or if that fair value gap matters. Traditional SMC analysis would have you drawing order blocks manually at every swing high and low, but look at what quantum flow actually identified here. This order block passed the mathematical filter, meaning real volume accumulated here, not just price bouncing randomly. I'm marking these key levels now. These light blue zones are where the algorithm detected true institutional interest. When you're manually drawing order blocks, you might miss the subtle volume signatures that confirm these areas. Quantum flow catches them automatically. Let me also show you the new quantum forecast system we just released. This is revolutionary AI pattern recognition that predicts price movement using our order block, liquidity sweeps, and fair value gap detection. If you look right here, you'll see these forecast lines that appear. That's the system showing you probable price paths based on the current active order blocks that are in play. You've got two modes here: similarity mode for trending markets, dissimilarity mode when you're hunting reversals. The construction methods give you three ways to build your forecast: cumulative, mean, or linear regression. Each one optimizes differently depending on your asset class. This is what you would call real-time AI forecasting that shows you a detailed visual of where the price might be heading next. These new features layer perfectly on top of the order blocks and fair value gaps we just covered. What you're getting is both the institutional footprints and the forecasts of where they're heading next. Manual ICT and SMC analysis requires serious skill and experience to execute consistently. You and I both know you can't accurately do that every time. Quantum flow saves you so much time and just removes the guesswork altogether. I can't stress to you how much this improves your trading. ES perfectly demonstrates why calculated analysis beats manual guesswork. Look at this liquidity sweep from yesterday. A manual trader might have drawn an order block at the obvious swing low, but quantum flow identified the real accumulation zone slightly below where the math showed institutional positioning. The result is that when price returned, it respected the calculated zone, not the obvious visual level. That's the difference between educated guesses and mathematical precision. Now, here's where it gets interesting: session-based filtering. I'm enabling London and New York kill zones. ICT teaches us that certain sessions carry more weight for institutional activity. London runs 7 to 10 a.m., New York from 12 to 3 p.m. But instead of just knowing this conceptually, quantum flow actually filters order blocks and fair value gaps based on when they form. Check out this London session order block from last week. The algorithm weighted this zone higher because it formed during peak institutional hours. Price returned, respected it perfectly, and delivered 40 points. That's session-aware analysis working. During New York hours, fair value gap reliability increases dramatically. Banks are actively repositioning, which means these calculated imbalances get filled with serious conviction. Here's how this translates to actual trading. When quantum flow marks an order block during a kill zone, I'm immediately interested, but context still matters for execution. Premium versus discount positioning, nearby fair value gaps, equal highs and lows. Quantum flow maps all of this simultaneously. Manual analysis would take you minutes to piece together what the algorithm shows you instantly. For entries, I wait for confluence between calculated zones. Maybe an order block that aligns with a fair value gap, both confirmed by the mathematical filters. That's when probability stacks heavily in your favor. Risk management becomes precise when you trust the calculations. Your stop sits just outside the calculated zone. Your target aims for the next mathematically significant level. No more guessing where institutions might be positioned. The Judas swing detection really showcases the power of calculated analysis. ICT teaches us about liquidity grabs and false breakouts, but identifying them in real time is tough. Quantum Flow spots these setups using probability calculations rather than subjective pattern recognition. When equal highs get swept, then immediately reverse, or equal lows get taken out, then bounce hard, the algorithm flags these as potential traps before they fully develop. Manual ICT analysis requires serious skill and experience to execute consistently. Quantum Flow gives you that same institutional perspective, but removes the guesswork. You get calculated order blocks, mathematically significant fair value gaps, and session-filtered analysis all in real time. Keep refining your approach with these concepts, and you'll start reading institutional behavior like a professional. Drop your best Quantum Flow setups in the comments, and I'll catch you in the next one.